For the last 45 years, silver investors have basically been the crypto brothers of the 1970s, sitting in the corner at parties, clutching their little shiny rocks, whispering any day now, while everyone else called it a pet rock and laughed. Well, guess who's not laughing this week? Silver didn't just wake up and stretch. It kicked the door off the hinges, moonwalked past the $50 level everyone swore was impossible, and said, "Hold my beer," on its way to $64 an ounce. That's right, new all-time high, beating the 1980 Hunt Brothers chaos and the 2011 I'm rich on paper spike. Except this time, it is not some billionaire trying to corner the market like it's a game of Monopoly. This is the supply chain basically giving the middle finger to 40 years of paper games. Meanwhile, the fancy trading floors in New York and London, total silent panic. You can hear the keyboard sweating. For decades, these geniuses have been selling paper silver, IOUs for metal that's straight up dosing. T-exists, like it's the world's worst NFT drop. At $64, that magic trick stops working. The market just called their bluff louder than your uncle at Thanksgiving, who still thinks Bitcoin is a scam. Now, when you look at the spot price on your phone and think, sweet, $64, let me grab some. Good luck, champ. Physical bars and coins are laughing at that price. Premiums are doing Olympic high jumps, and delivery times went from 2 days to see you next season. Translation: the screen price is becoming about as real as those limited edition Funko Pops that somehow never run out. Hitting $64 is the psychological point of no return, Mike, when your ex finally blocks you on everything and you realize, oh, this is actually happening. There's no overhead resistance left. No sad bag holders from 2011 waiting to dump. Everyone who owns silver right now is up, sipping margaritas, and everyone who's short, looking at you, big bullion banks, is staring at losses so unlimited they need a new word for a lot. The poor man's gold just speedrun its character development and became the most strategic asset on the planet overnight. And that little window where you could still grab it without taking out a second mortgage? Yeah, it didn't just close. It slammed shut, locked itself, and threw away the key while flipping you off on the way out. Okay, zoom out from the coin shop chaos for a second and look at the real villains of this story. I mean heroes. I mean giant factories that are currently inhaling silver like it's pumpkin spice air in October. 3 words: solar, EVs, AI. The unholy trinity of we need silver yesterday. Technologies that all showed up to the same buffet at the same time wearing sweatpants. Solar? That industry went from cute little rooftop panels to straight up vacuuming 29% of the entire planet as silver supply. That's not growth. That's a hostile takeover. The new TOPCon and HJT cells are basically silver addicts, mainlining more shiny stuff per panel than your aunt's jewelry box. Electric vehicles? Every Tesla rolling off the line is secretly a silver vampire in a sleek white disguise. And don't even get me started on AI data centers. Those things need silver-coated contacts so badly, they basically walking around with "will work for ag" signs. Here's the funny part. Tesla, Samsung, and half the factories in China don't give a single rip about the pretty little price tag on the COMEX screen. They care about one thing. Can I get the metal, or do my assembly lines turn into the world's most expensive modern art installations? Spoiler. Right now the answer is nope. So what do megacorporations do when they panic? They skip the middleman and slide into the mines. DM is like, hey, remember that silver you were going to dig up next year? Yeah, we'll take it now. Cash up front, no questions. Off-take agreements left and right. The silver that used to trickle into your local coin shop is now getting rerouted straight into factory furnaces, faster than Amazon Prime on Black Friday. Result? A supply vacuum so strong it could suck the chrome off a Tesla Cybertruck. We're now 5 years deep into an official silver deficit, and the market just had that slow-motion, oh crap moment. Silver isn't just money anymore. It's officially unobtainium, the element so critical that industries are willing to arm wrestle each other for the last scraps. Translation for anyone still sleeping on this. The easy days of walking into a shop and casually stacking ounces like it's Pokemon cards. Those days just yeeted themselves into the sunset. TikTok friends. The factories aren't slowing down. And neither is the squeeze. All right, let us take a field trip to the two places that have been flexing like they read the Fort Knox of silver for decades. COMEX vaults in New York and LME warehouses in London. Spoiler, they read looking more like a college kid's bank account the day before payday. Registered silver, the stuff that's actually supposed to be there when someone yells, "Give me my medal," just hit levels so low they need a step ladder to see the bottom of the chart. We're talking a 70% drawdown from 2020 peaks. Translation: the delivery cupboard is basically a sad moth and a half-eaten Tic Tac. Here's the hilarious plot twist nobody on CNBC wants to say out loud. Most of the silver chilling in those vaults is labeled illegible, which in Wall Street speak means, yeah, it's here, but it's not for sale. Bro, it belongs to ETFs boomers with bunker mentalities, and some guy in Connecticut who is waiting for $500 before he even thinks about parting with his monster boxes. So the pile that can actually stop a delivery failure? Thinner than the plot of a Marvel sequel. This month when big industrial buyers rolled up like, "Nah, we don't want your cash settlement. We want the actual shiny." The exchanges almost blue-screened. Grown men in $5,000 suits were speed-dialing each other whispering, "Bro, do you have any bars that aren't spoken for? Bro." Lease rates for physical silver just flipped harder than a house in 2006. Now costs more to borrow actual metal than to borrow dollars. That's called backwardation, and it's the market's version of running into a burning building yelling, "We read fine. Everything's fine." Meanwhile, vault operators are playing the world. As most expensive game of musical chairs shuffling the same tire bars from eligible to registered and back again like it's a shell game at a carnival. Cute trick, fellas. Except everyone can see there's only one P. Bottom line, there's roughly $1.2 trillion in paper silver promises floating around, and about enough real metal to fill a Costco pallet on a slow Tuesday. Welcome to the COMEX, now officially rebranded as Hotel California. You can deposit your cash anytime you like, but the silver, yeah, that's never leaving. The vault doors are still open for photos, though. Real aesthetic. So who's currently sweating through their Armani suits right now? The short sellers. The same geniuses who've been treating silver like the ugly duckling of the periodic table for decades. Their whole vibe was, "Lo, just keep selling paper silver we don't have. Price will never go up. Free money printer go burr. Cool strategy at $25, bro. Kinda spicy at $30. Absolute career ender at $64. What we're watching right now is the mother of all short squeezes. Like GameStop, if it ate a protein bar made of geopolitics and industrial panic. Every time the price ticks higher, the banks get a polite little email from their broker that says, "Hey, bestie, margin call. Venmo us another couple billion, or we start liquidating your yacht." To cover, they have to buy back the silver they never actually own. But guess what? There's nobody on the other side of the trade picking up the phone. So they buy gives price moons, gives more margin calls, gives they buy harder, gives price moons again. It's the financial version of stepping on a rake, then panicking and stepping on 12 more rakes. These violent up and down swings you're seeing, that's not healthy volatility. That is trillion-dollar institutions thrashing around in the shallow end screaming, "I'm fine," while the lifeguard physical supply is on a smoke break that started in 2020. Word on the street, at least one big trading house is already circling the drain so hard their risk department is sending out resumes written in Comic Sans. If one of them actually tips over, game over. The COMEX paper casino closes for renovations permanently, and the only price that matters is whatever some dude in a Facebook group will trade you a $100 bar for. Cash or ammo, no low ballers, I know what I have. So yeah, the shorts thought they were the house. Turns out they were the guy who brought a $20 buy into a poker game where everyone else went all in with monster boxes. TikTok, hedge fund heroes. The Reaper's wearing silver sneakers, and he's doing cardio. So what does $64 silver actually mean for your bank account, your grocery bill, and the entire circus we call the global economy? It means the greatest wealth transfer since Wi-Fi became free at Starbucks just kicked off. And it's not going to the guys wearing Patagonia vests in Silicon Valley. It is going straight to the weirdos who've been stacking little shiny circles and rectangles in their safes while everyone else was chasing 0.00069%. Savings account yields and meme coins named after dogs. Congratulations, tinfoil hat uncle, you won capitalism. Everyone holding physical right now isn't a speculator anymore. They're the new landlords of the 21st century's most critical resource. Solar panels, EV, AI servers, they all pay rent in silver, and the lease just went month to month with 0 vacancies. Major banks, yes, the same clowns who were short 10 minutes ago, are now quietly sliding out reports whispering $100 by end of 2026. Translation, even BNP Paribas is out here sounding like a YouTube silver channel with 40,000 subs and a cat in the background. Meanwhile, the US dollar is taking this personally, like that ex who sees you thriving and suddenly starts posting gym selfies. Silver going parabolic is just the market's polite way of saying, hey Fed, your money printer goes burr. But geology doesn't. The smart money already finished loading the truck. They knew the solar boom was coming. They knew the mines were coughing up dust. They knew the COMEX was running on hopes, dreams, and 2 rusty kiloburs in the back. Now it's the general public's turn to have that slow motion, wait, what did I miss? Moment in the grocery aisle when eggs hit $12 and silver hits $120. One quick heads up though, this ride is about to feel like Space Mountain on 10 shots of espresso. The powers that be will absolutely try every trick in the playbook surprise margin hikes. 2 a.m., rule changes, CNBC hit pieces, whatever it takes to scare you into selling at $78 so they can buy at $76. Classic playbook. But here's the punchline they can't escape. They can't print silver. They can't QE a new silver mine into existence. They can't TikTok dance their way out of basic geology. $64 wasn't the ceiling. It was the starting pistol. The era of LOL silver is a pet rock is officially dead. The era of strategic scarcity just pulled up in a Cybertruck, windows down, blasting whatever song makes Fiat Brothers cry. So stack what you can, zoom out, and buckle up. The real squeeze hasn't even hit the group chat yet. See you at triple digits, legends.